welcome to the first episode of our podcast series. I'm Juhi Chanwani,
I'm Namrata Kaushal.
and we're thrilled to kick off this series with you. In each episode, we will deep dive into the evolving world of finance, uncovering insights, stories, and expertise from some of the brightest minds in the industry. Joining us today is Mukul Kanchan, CFO at Plum, a leader in redefining employee health benefits through innovation and technology. With a rich background in finance and strategy leadership, Mukul brings invaluable insights into the evolving role of CFOs and the future of finance. Mukul, you've had a remarkable journey in the finance world, leading key financial strategies across different industries. Please take us through your career path and the pivotal moments that shaped your role as a CFO today.
First of all, thank you, Juhi. Thank you, Namrata, for inviting me. I look forward to this conversation. Thank you so much. Quick introduction. My name is Mukul. I'm CFO at Plum. Plum is an Insurtech based out of Bangalore. We are a startup, a Series A startup, and doing some real, I would say, deep tech stuff on the insurance side, specifically on the employee insurance side. In terms of my journey, I would say, Juhi, I have been an accidental CFO, to be honest, because for nearly a decade in my early years in my professional career, I have been doing mostly private equity transaction advisory, for working for companies like DE Shaw, Ernst& Young. However, when I joined Clicks Capital, which is essentially XG Capital, so GE got acquired by Apollo Global, which is a private equity. I basically joined them. I was a part of their founding members team, and my mandate was very extensive, right? Of course, you can imagine when a company is like building businesses from scratch, you have a very varied mandate. So I was responsible for expanding their inorganic growth as a strategy, which means that look for more inorganic growth for clicks to make it bigger and bigger. But in the process, what really happened is you have to work really, really, really deep with the finance function to understand the numbers, right? Because you're out in the market selling the story for clicks, right? And that is where things started to change. There was a CFO which was transitioning from Clicks Capital, and I was given the responsibility to take the handover, I would say. And then one thing led to other, and then eventually the management asked me to take over as CFO. So I would always tell people that it has been an accidental step. I have always been a transaction private equity guy. But I think having that experience is very valuable because you have exposure to the other side of the world, which means that you understand how the market dynamic works, how the investor world views a business. And that really helps a CFO to shape strategy for any business, any organization, right? And I think I've noticed that incrementally that of late, being a chartered accountant is not necessarily the precursor, the prerequisite to being the CFO, because an MBA like myself, right, we bring a very different kind of a skill set on the board. And that is what has worked for me, I would say. And my stint for nearly 8 years at Clicks Capital, being the CFO there, managing business finance, FP&A, controllership, tax, has been instrumental. I obviously inherited a very, very large team of finance. But then came a time when I really wanted to understand what is really happening in the tech world, because there are companies out there, who are using deep technology to create products to solve for a lot of difficult problems, right? And one of the problems, and then Plum happened. One of the problems that Plum is trying to solve is to make employee insurance as seamless as possible, to provide a consumer grade experience to employees. Because today, I can imagine the employees have a very broken experience when it comes to availing the benefit under the employee sponsored healthcare, right? So that is where we are. That is how my journey has panned out, and really enjoying it.
Wow, that's quite a journey, Mukul. Thank you for sharing that with us. What do you think you identify as the most significant financial trends that shaped 2024, and how do you think they are influencing corporate strategies?
No, so things are very weird these days. You look at the macroeconomic world, you look at what is happening in the US, there is complete amount of macro instability. And all of that has a bearing on how the capital flows globally. And eventually that will have a bearing on how you can access the capital market, be it on the equity side and on the debt side. And given Plum is a startup, we will obviously need capital for growth. And because of that, you have to really read the market very well to be able to understand and make sense of how these macro strategies is going to impact you in the medium term and the long term. So for example, After 2022, I mean, we have noticed that there has been a funding winter, right? And we are all waiting that that would subside and the capital would start to flow. And then starting 25, there is Donald Trump, and he's creating a lot of changes, which is causing macroeconomic disruptions, right? So we are still unclear. Companies are unclear. The investors are unclear. I mean, having said that, there is still a lot of money on the waiting to be deployed. It is becoming so unstructured, and it's very difficult to predict what's going to happen right in the future. So one day India looks attractive, tomorrow China looks attractive, and there's a lot of hot money chasing good deals, right? So that's on the macro side. I would say the other big disruption which is happening is AI. AI is everywhere, right? I mean, we are all hearing enough and more about AI, but I can tell you from my perspective and what is happening at Plum. I mean, complete disruption, complete havoc, in my view. An organization as small as Plum trying to implement AI at scale, that is substantial, right? And and there's a lot of AI-driven financial adoption also happening, right? So this is not only restricted to bringing operational efficiencies in the business, but we are also implementing AI in the finance vertical, and we'll talk about that later. As I said, the third piece is there is greater focus on efficient capital allocation. Now, investors are increasingly seeking, ways to increase the return on their capital invested. So they are asking questions, they're asking hard questions, and they are pushing the financial leaders to think out of the box and really justify how the capital is being deployed in the organization. So there is a lot of data driven analysis which a modern CFO has to be able to put a finger that yes, this is where we will have to put incremental money, and this is where the growth will come from, and this is where we'll provide maximum return on capital. Because I cannot only now speak on behalf of the management, I also have to speak on behalf of the investors as well, right? Yeah. So that is the third big shift which is happening, which has happened in 2024 and will continue to pan out in 2025 also. And then the last bit is that now CFOs have to become very smart and efficient in terms of capital structuring, corporate finance. So there are a lot of I would say innovative structures that CFOs are required to come up with, be it on the equity financing side, debt financing side, and a lot of other things. I mean, imagine companies doing companies are pushed to bring efficiencies using strategic partnerships, joint ventures, and so on and so forth. So a lot is evolving very, very fast. I would say these are the trends that has panned out in 2024 and will continue to pan out actually in the long.
So Mukul rightly said the economic turbulence and the macro factors that affect. So with economic uncertainties and market volatility becoming the new normal, financial planning feels like a spreadsheet exercise and more like crisis management, right? So how do you think companies should adjust their financial strategies and risk management approaches to stay resilient?
The one thing that we have particularly done at Plum is to bring stability with growth. I mean, imagine, new age companies, at least the startups, and I'm talking from our perspective only, not generic. We are required to demonstrate growth, and then
Right.
comes time that someone will have to stand up and say, is this growth coming at a cost of stability? And that is where you will have to take very calibrated kind of a measure, where CFOs are required to demonstrate that any growth that is coming up has to be sustainable in nature, right? So eventually, because the businesses have to demonstrate that the unit economics are met, the metrics are met, right? And because sooner or later, as I said, the investors will ask questions, right? So we are required to bring that stability, and if that means that you have to calibrate the growth, you are required to have a conversation internally and calibrate that growth. Now that doesn't mean that you're stopping the growth. It has to come at the right cost. So it's a very fine balance, which again the CFOs are expected to bring on the table based data. So there is no two way that you can just anecdotally state that, hey, I want to press pedal here while I want to apply brakes there. It has to be all data driven. So that's very important these days, given the macroeconomic environment. Then I would say, CFOs are also required to plan dynamically. Today, as I said, there is a liquidity crunch both on the debt side. So cost of borrowing is very high these days. Although the central banks are reducing the rates, but it is not reflecting in cost of doing business. So that's on the debt side. On the equity side, as I say that yes, companies are able to attract equity, but good companies are able to attract equity, and that's always the case. That's always remain right. So you have to be very cautious in terms of doing that dynamic planning as to if you have to grow, right? What is that right mix of capital structure which will allow
Yeah.
you to grow? So if equity is not available, can you finance it through debt? And these are all the right questions that the boards are asking CFOs. And you have to be dynamic enough and have your relationships going on with the banks, credit rating agencies, venture capital firms, and a lot of advisors out in the market to be able to achieve that. The third very important piece, Namrata, is that there is complete focus on cost. So I mean, you're required to bring the cost down. Having said that, yes, not mindlessly, but there is a lot of pressure, and the companies and the management are very conscious in terms of cost. Any discretionary spends are being pushed to later time, which means that if I have to invest in, say, something which is good to have, I'll push it for next quarter or push it for next year. And this is like just navigating through the macroeconomic environment, nothing else.
Right.
There is a lot of discipline that also CFOs are expected to bring, and probably it's a part of what I've already spoken, which includes like you have to diversify your funding base. You also have to apply capital structure logic where you are investing in businesses or verticals which are giving you high ROEs as compared to projects which have long gestation period, and the ROI profiles are not as great. And you also have to have a very razor sharp focus on cash flows, because today what is also very important is to have a very crunched receivable cycle, which means that if I'm doing business with someone, make sure that we are getting money on time, as basic as that. So a very dynamic environment, but yeah, that is what it shapes you for the future, I would say.
Great.
Well, there's so much buzz around AI and tools like OpenAI. I think that's also the point, which was one of the pieces that you were talking about in the beginning. How do you see that changing the game in finance, right? How are you seeing technology shape finance operations essentially and decision making? And we would also love to more about how this is happening, especially at Plum.
So no, as I said, this, the biggest change which is happening is AI for sure. So and let's talk about how it is impacting Plum.
Yes.
So one, see, technology is at the heart of Plum. So we are a tech first organization and will bring tech to bring operational efficiencies, be it on the servicing side of it, be it on the distribution side of it, or be it on the product side of it. Now, for us to be able to ensure that all of this is achieved, we need to have integrations with all of our stakeholders. For Plum, our stakeholders at the one side is insurance companies. Of course, we have to deal with them. And on the other side, it is our B2B customers. Imagine that you have taken, an employee insurance from Plum. So we need to have integration with you as well. So what we are actually doing is that, we are having a lot of APIs and tech integrations with the insurers, and a lot of integrations with a lot of HRMS, for example Keka or Darwin Box, where companies are using that. And imagine all the servicing becomes absolutely seamless. For example, if new employees are joining your organization or leaving, that means that you do not have to provide data separately. It's your HRMS from where we will pull the data and will talk to the insurers using APIs and back and forth. So that is one kind of integration which Plum is driving. It's very, very, very important, and it's like bread and butter for us. If I talk about very specific modules, imagine that we in the business of providing employee health insurance. So therefore, of course, we need to have a very solid customer support team as well, where they're giving hand holding a lot of employees at the time of
Yeah.
requirement. But that is something which can be automated, to be honest, and a lot of tech is being deployed towards that side, which is bringing efficiency. So I'm going to take an example which becomes easier for you and our listeners. Imagine that if an employee has to understand is covered under the employee insurance policy or not. As earlier, you have to go through hundreds of pages of document. If you can't understand, very technical, you have to call someone, and my customer support team will do the same, right? Because all these contracts are very bespoke in nature. They will go through it and then maybe give you an answer after 24 hours. But today, what is happening is we've created an AI layer over our policies. So you as a user can actually chat with your policy. For example, if a particular kind of cataract is covered in your policy or not, and you're imagine you're doing it live with your policy and you're getting a time a real-time answer. For example, this kind of cataract is covered, this kind of cataract is not covered, and therefore you are empowered and enabled to take decisions accordingly. And this is only one example. There are numerous such examples where, I'm talking about Plum. We have almost automated 30% of, our own incoming uh, queries over calls and emails and phones to our customer support team by using AI. We have just automated that. And this is the right way to go about it as well, because imagine when our business was probably one tenth of what we are today, we had the same number of customer support team. Today also we have same number of customer support team, despite we becoming 10x of our size of our business. And actually tomorrow also, if we become 50x of our size, today's size, we might actually need only the same number of customer support team. So incrementally, a lot of repetitive stuff is getting automated using LLM tools like ChatGPT, and there are a lot more. And this is not only restricted to customer support. This is, we are building efficiencies for the sales and accounts management team as well, where, imagine accounts management team had to, manage the relationship with the customer, provide a lot of data, provide a lot of decks,
Yeah.
updates. All of that is getting automated. Talk about finance. We today take a lot of decisions basis what maybe Chat GPT is spitting out. What you can do is you can upload raw data, and you can ask very customized questions. And what the LLM tool does is, they analyze the data and throws out the insights, I would say. So I would say the changes are happening faster as compared to what the leaders can imagine and the what world is ready for.
Great. So, Mukul, as you mentioned earlier, very rightly, that CFO role has evolved far beyond just balancing the books. Today you're part of strategist, part risk manager, and sometimes even part therapist for the business, right? So, how do you see the CFO's responsibilities expanding in today's fast-changing business environment?
Yeah, so as I said, a CFO honestly has to be a sounding board to, I would say, the senior leadership. A lot of time people believe that the CFO is a person who says no all the time, but honestly, that's not true anymore. You can't survive just saying no anymore. You have to come up with a very logical argument backed with data, and if it's a no, yes, it's a no for a reason, right? The second is you have to work very closely with the business leaders to create strategies, right? Business leaders, CEOs, CTOs to create strategy. And a part of that is capital allocation strategy, which as I have been speaking about in the beginning of this podcast also, which means that basis data, you will have to justify which part, which business, which segment, which product actually makes sense for the organization, right?
Yeah.
And of course, when you're talking to leadership, it goes without saying that there has to be a buy-in that it has to be the org first and then the
Yeah.
leaders second, right? So assuming that alignment is there, the conversation becomes easier. And the conversation becomes much more data driven. But yeah, you have to partner with them. You have to explain with the data, and of course, you have to also build a lot of good relationship, a lot of humorous relationship with the management, with the leaders, because a CFO's job is not easy. Honestly, as I said, most of the time you have to say no basis, yes, basis data, but then there is a very thin line between actually stifling business, stifling growth, and being prudent. So you have to demonstrate that, and that is how the landscape is shifting. But yeah, it's not difficult.
Plum is also transforming the health insurance space with its innovative approach to employee benefits, right? Given the current economic climate, how do you essentially navigate financial planning to balance growth, sustainability, and also customer affordability in such a dynamic sector?
No, so absolutely. Like it's a tough space to be in. Healthcare, the expectations are obviously very, very high from end users' perspective. So it's a tough industry to be in. But I just want to put some numbers on the board. For example, we measure NPS, which is Net Promoter Score, very, very,
Yeah.
very deeply. And in health and wellness space, having a promoter score of 70 is a very healthy number in my view. And this is something that we take pride in. Yeah. No,
Yeah.
so absolutely. As I said, see, the markets are very challenging these days. If I talk about the industry, look at what happened in the insurance industry in last 10 days. Patanjali bought Magma General Insurance. So imagine an FMCG company wanting to get into insurance is crazy. That's one. Second, Bajaj Allianz JV has come to an end after 28 years.
Yes.
So Allianz is moving on. and now they are joining hands with Geo. So there is a lot of havoc which is being created in the industry, and navigating that is not easy in my view, because see, you build relationship with insurers, and imagine the management changes. But having said that, see, it's a part of our job. Honestly, they are one stakeholders for
Yeah.
us. And then a part of our job is also to create enough supply, right? In the sense, enough relationship with the insurers to be able to offer it to our end employees. See, if you only talk about Plum specific, we are very, very focused on having deeper integration with the insurers who are able to offer technology integration with us, right? Imagine a very traditional insurer who has got nothing to offer in terms of integration, and we following the same age-old approach of sending papers and getting approval over phones and works for Plum. So fundamentally, we work very deeply with some of the new age insurance companies. I just want to take a few examples like ICICI Lombard, Niva. These are all new age insurers who are now tech savvy, who
Yeah.
have a digital stack to be offered to partners like us, and they're ready for technical integration with us. So our thought process is the same, but uh, the other part of it is to also maintain relationship with all the insurers and keep trying everyone, because it's a part of the evolution,
Yes.
and a part of our mandate is to also, as I said, maintain a supply of insurers for our end users. So yes, industry is very dynamic. And will always remain dynamic. I, in fact, have a view that there will be a lot of M&A which will happen in the insurance space and in the health insurance space. I'm sure you would have read that LIC is wanting to get into health insurance space by acquiring a standalone health insurer.
Yes.
And an announcement is around the corner. Probably they'll announce it by 31st of March. I think one week from now we'll hear who they have acquired. So there's a lot of action. I think there will remain a lot of action then in this space.
Great, Mukul, you've had an incredible journey in finance, right? Working across different industries before joining Plum, of course. Looking back, what would you say are some key experiences that have shaped your leadership style and approach as a CFO today?
See, I would say I've been supremely lucky the way things have panned out for me. But one thing is very, very, very important is that if you have to be a good CFO, you have to be a good storyteller. I think traditionally that has been missing. People have viewed CFO desk as a person who would have control on the numbers, bring internal controls, financial accountability, and so on and so forth. But today that's not the case, and honestly, that's all hygiene. That is table stakes. Honestly, people are not even bothered if you're getting the audit done in a timely fashion or not, because that is table stakes. As I said, this is obviously expected from you. What's beyond is what you have to bring on the table, right? So I think the other important one is storytelling. You have to have a good hold on what you do, which means that you have to understand your own business very well, your own matrix very well. You have to understand the competitive landscape very well to be able to make sense what you're doing right and what you're doing wrong, and accordingly help the organization pivot. Then the second bit is you have to have deep understanding of the numbers, and therefore you may have seen that a lot of business finance stroke FP&A leaders and now actually end up becoming the CFO of the organization. Look at what
Yes.
happened to Apple. The head of FP&A for Apple is today's is the CFO for them today,
Mhm.
and it has happened very quickly in last probably in last 4 5 years. He has pivoted from being the head of FP&A to now the CFO of the organization, which is a great kind of an indicator of what the investors, the management, the CEOs expect from the CFO, to have greater control on numbers. And probably that is when even in my own journey, the reason I became CFO for Clicks is because I was working very, very, very closely with the FP&A team at Clicks, because as I said, I had to sell the story of Clicks to the outside world, and therefore I needed to have good control, to the extent that I actually ended up like managing, breathing, sleeping FP&A for a living at that particular point in time, right? So that's another, I would say, is what is expected today from them. And the third is you also need to be able to solve some complex problems. That is also expected from you. For example, be it on structuring side, for like as I said, capital allocation, right? Capital allocation doesn't only mean raising equity, raising debt. It's a mix of both, with a lot of long-term, short-term initiatives, which will help you get there. Complex structuring is one that helps you. And honestly, because I had that M&A and private equity background, I've seen a lot of deals in my past of ours where you bring financial engineering capabilities to be able to generate that delta for the organization, right? That incremental value for the organization. So that's very important these days. I think what is also important is to also have some exposure on the industry side, on the mergers and acquisition side, because you cannot work in silos. You need to be able to have a good sense on the competition. And if you have worked in mergers and acquisitions, which I did in my previous avatars, you really get the knack of picking insights from the market very fast, right?
Right.
You create that network and pick insights very fast, which comes very very handy for the organization. And
Mhm.
actually sometimes it's the make or break kind of a situation for the organization in such complex scenarios, right? So having that M&A exposure helps today's CFO for sure. And the last bit is technology. This is something that you have to learn. I have learned, and I'm sure many CFOs out there are learning life. There is no out, because you have to also work very closely with the CTOs today. Because eventually, if the organization or the management agrees to invest into something, that then it is the CTO and the technology vertical which will press the pedal on investment, and that's a huge investment.
Right.
And you need to understand the nuances of technology to be able to have a meaningful conversation with the CTOs, right? So I think, and then obviously you have to implement automation, AI, and so on and so forth in your own
Right.
level. So I would say technology in general is very important. You need to, if not pro, you need to be good at it. Honestly, you need to speak that language. I
Right.
would say. So these are the
Mukul,
five things
right.
I think which is very
Yeah.
important for today's CFO.
Great. Mukul rightly said, you did mention the collaboration of finance with technology, and you need to keep yourself updated on the trends around. So, how do you decide which trends are really worth incorporating at Plum?
Okay, that's a tough one. That's a tough one, Namrata. See, as I said, I personally spend more than half of my time talking to my peers, the peer CXOs, and also talking to the competition out there, talking to a lot of advisors out there in the market. Because, in your silos, it is very easy to get swayed by the agenda that you have been driving internally, not knowing what is going out elsewhere in the market, right? So if I talk about Plum today, a lot of our competition is actually trying new stuff. For example, Policy Bazaar wants to get into primary healthcare, which means they want to open hospitals. And there is some thought process behind it. There is a strategy behind it. They're doing vertical integration because they have a lot of data. They have a lot of data of their customers, of the claims, and of the all the reimbursement that happens. And by having your own setup, can you bring optimization? Can you bring cost efficiencies? Can you improve the experience of your customers? And I can go on talking about it, but there is a thought process. So people are trying new stuffs, very different stuff. If I have a very narrow internal view, I think I'm destined to fail. And that is why I think most of the time, actually, my job is to talk to advisors like, say, vendors, some investment bankers, talk to investors, private equity. What do they want? What do they look for? A lot of investors do ask whether we want to become insurers ourselves or not, because today we are brokers, we want to become insurers. So these are all right questions. These are all tough questions, and we need to be ready with the answers. And for our own hypothesis, we have to look externally also, right? And that is what I think is very important for us. And that is what we are doing as well.
Amazing. Great. I think with that, we come to the end of our podcast. Mukul, it's been fantastic having you on the podcast. I think
Thank you so
the,
much.
the valuable insights that you've shared on finance, technology, and leadership will really, really help the listeners of the podcast. And we look forward to seeing how Plum continues to innovate in this space as well.
Absolutely. Thank you, Juhi, for having me on this podcast. Namrata, thank you for the invite. Really appreciate that, and have a wonderful time chatting with you. Love
Thank
this
you.
Thank you.
process. Thank
Thank
you
you
so
so
much.
much.